Shares of Palantir plunging today, despite beating expectations in the first quarter and hiking its full-year guidance. The stock's solid quarter seemingly not enough to soothe some fears around the software giant's lofty valuation. Palantir stock has risen more than 60% so far this year. Joining us now to dive further into the most recent quarter, we've got Louie DiPalma, who is the William Blair Research Industrials Analyst. Louie, good to have you here with us. There's one kind of major number that a lot of people who are lighting up the Yahoo Finance platform will see, and that's the PE ratio around this stock, which just tells the story about how far run this valuation is still trending right now. I want to get your analysis on that compared to what we heard in the quarter.
Yes, and thanks for having me on the show. In terms of the valuation, you brought up the PE ratio, and quite honestly, it's in the stratosphere, and investors are assuming that the company can maintain 30% or 40% plus growth for the next 5 years with that type of valuation. For some context, the company's valuation trades at 64 times 2026 consensus sales, and CrowdStrike is the second highest name in all of software in terms of its valuation at 18 times sales. So Palantir theoretically could fall by 70%, and it would still be tied as the most expensive name in its entire software peer group. So the stock is not cheap by any stretch, but you are paying for quality here as the results were pristine.
So talk to me about those fundamentals. Obviously, the valuation is of concern, but I know in your notes you said that you also see revenue growth slowing in the second half of this year. You said that the numbers are pristine. Is this the last great Palantir report, at least for this year?
No, we think that there's a potential for the revenue growth to decelerate in the second half of the year or early 2026. However, if the revenue growth decelerates from 39% to 36%, those results are still off the charts. They're still among the best revenue growth in the entire software universe. And then if you combine it with the fact that the company achieved a 44% operating profit margin, last quarter, and in all likelihood, that's going to continue to trade higher. The run, isn't necessarily done. It's just the fact that since there is no valuation support, the stock could go down while the company continues to execute in a very impressive fashion.
What's a realistic growth rate that investors should expect going forward, and where would those contracts, where would those portfolio clients come from, especially knowing that they have some heavy government exposure, and some governments, especially here in the US, have been looking across where they could cut costs, which was one of the concerns actually for Palantir earlier on, even before Liberation Day?
Great question. We think the growth rate over the long term will probably be more along the lines of the mid-20s versus the most recent 39% in the last quarter. And as it relates to logos, we do extensive government contract analysis. We brand our tracker as the dotted line. And there are several awards in Palantir's pipeline. One award that we discussed in a note is called Next Generation Command and Control, in which Palantir is partnering with L3Harris. There's another award called Golden Dome that Palantir is also likely partnering with L3Harris and Voyager Space and Technologies. There's 2 awards for DISA. There's an award for Indo-PACOM called Joint Fires Network. The company has continued to add to its Maven platform. It announced the big deal with NATO. So there's a ton of stuff in the pipeline that should enable the government momentum to continue. And then switching to enterprise, there's a lot of stuff there too.
There certainly is plenty to unpack with this name, Louie. The stock down a little over 8.5%. Thanks for joining us. Appreciate it.
Excellent.